Welcome to Matters Financial and Geopolitical from a Frontier. Thank you as always for stopping by. As I was coming in this morning, I noticed a jacaranda tree in bloom, and it's a little bit like the seasons might be in Europe. And I thought to myself, is it the jacaranda season already? And I said, good morning world. And I must say, I love the sight of those flowers on the tarmac, and it feels as if you're driving or walking on a carpet of flowers. It was excellent yesterday to catch up with Michael Joseph, Esquire. Always a fascinating deep dive conversation. Michael, of course, was the Chief Executive Officer of Safaricom for many years and a friend. And it was really quite a pleasure, and he always has very deep insights into what's happening here. Look at this dollar and crude oil, Brent crude oil correlation. This is from Aurelia in Copenhagen, Denmark. She's rather good, particularly at sterling. And she's also saying that she thinks dollar yen is going to 104. Have a look at her chart, and who am I to argue with her? And also talking about euro dollar, have a look at her chart there as well. I went back to Emperor Babur, and if you've never read his autobiography called the Babur Nama, you really should. And in this extract, he's talking about melons. And they're a thing for Babur. He's hot, he's grumpy, he's newly sober in Hindustan. He remembers the melons of Kabul. How can one forget the pleasures of that country, especially when abstaining from drinking? How can one allow oneself to forget a licit pleasure like melons and grapes? Recently, a melon was brought, and as I cut it and ate it, I was oddly affected. And ate it, I was oddly affected. I wept the whole time I was eating it. Early in his travels, Babur, referencing a king from the Shahnama, carves on a rock, like us, many have spoken over this spring, but they were gone in the twinkling of an eye. We conquered the world with bravery and might, but we did not take it with us to the grave. Babur did not take the world with him to the grave, but he let himself in the world. It's a rare thing when you read his autobiography. He's irreverent, he's brilliant, he's smart, and his appreciation of the finer things in life are extraordinary. The president of Mexico has apparently confirmed that Donald Trump has accepted an invitation to visit Mexico for a private visit. That took me back to a very nice photograph of Prime Minister Justin Trudeau, the Mexican President Enrique Pena Nieto, and US President Obama. And Prime Minister Trudeau is truly outstanding at understanding how to maneuver and finesse the 21st century media, and this photograph is an example of that. International markets for the near-term rates path, the main driver last week was not Chairwoman Yellen, but Vice Chair Fisher, who's typically quite hawkish actually, but he's been pushed to the front, and I think that can only signal that a September rate hike is more likely than not, and I think that's why you're seeing the movements we're seeing in the markets, and particularly the dollar yen. The Bank of America, these stocks will surge when millennials start making more money. Take a look. Let's move on to the currency markets. Euro, dollar, 111.45, dollar index 96.03. Japanese yen, big mover of the last few sessions, got as high as 103.30 plus, 103.17 right now. The pound, a little bit of a bounce, 131.30. I'm not bearish the pound, I've made that pretty clear. I'm looking to buy it on dips. Aussie, let's take a look at that, 0.7516. India rupee 66.985, South Korean won 11.1577, the Real 323.81, the Egyptian pound 8.8819, and the Rand strengthening a little bit after a sell-off. This morning was at 14.49, last time I looked 14.45, thereabouts. I'll put up a 3-month chart of the dollar index. I think we'll be at 100 by year end. Dollar yen, near-term target is 104, and maybe even a little bit higher than that before before we resume the downdraft. But currently what's driving it is short-term treasury bill yields, for example. Have a look at Aurelia's Australian dollar chart. Seems to me she's thinking of a bounce, and you probably got one actually off the lows, 75.70. Let's see if we can hold up. And this caught my attention. Composite house prices in Vancouver rose 32.6% through July 2016. Commodity markets sure looks like spoofing in gold futures with 25 contracts, but that's not allowed. This is a tweet from Huntsader, Eric, Scott Huntsader. And then gold, have a look at the 6-month chart. Last trading around 13.14. If it loses 13.05, it could sell off pretty dramatically, in my opinion. But it's bounced off that level a few times, so we've got to keep an eye on it and see how it transpires. Crude oil, last trading, US crude oil, $46.40. I'm a big fan now. You've got to pick your spots. You could get a $2 rally, and that might be the opportunity to sell it. But on balance, I think we're still headed lower. And have a look at a longer-term chart from Holger, saying that oil is falling on a stronger dollar. And crude glut, as Iran says, on target to reach production peak. Emerging market sovereign bond spreads are at a 3-year low. This is from Market Outperform, 447 basis points. This is a moment for Kenya, amongst others, to issue before this window shuts. Let's move on to Africa. Tension continues to grow in Gabon ahead of the announcement of the presidential election results. Army is deployed. According to an interview I heard this morning on Alan Kasuja's BBC Newsday programme, Ping is saying he's won 8 out of 9 districts. The UN chief is urging restraint in calls to Gabon candidates. So it's a pretty tricky situation, and it always is in Africa when it's very closely contested. The AFDB's CEO, President and Chief Akin Adesina, who I met and caught up with actually at TCAD, it was great to see him, told the FT that he expected the downturn in Africa, which was triggered by the slump in commodity prices and the slowdown in China, to last for up to another 3 years. This is a good point. Africa was facing a debt challenge rather than a crisis, he said, but warned there has to be a lot more fiscal consolidation. Applies here as well. IMF forecasts that Sub-Saharan Africa's GDP will grow at 1.6% this year, a sharp decline from 3.5% in 2015, well below the average of 5 to 7% over the past decade. African governments sold $12 billion of Eurobonds last year, compared with $26.5 billion 2006 through 2014, and saying the weakness of many African currencies has meant debt service costs have soared in local currency terms. Adesina took over the bank's president in September last year. He said tax to GDP in Sub-Saharan Africa was about 14.5%, compared with more than 30% for most developed nations. Needs to be a lot more done to expand the tax base in Africa. Instead of African countries running off to raise a lot of Eurobonds, I think there's huge amounts of capital available more locally that we must tap for Africa's development. For me, without energy, Africa's going nowhere. You can't have industries without energy, and you can't have growth without industries. Providing jobs for young people should be another urgent policy goal, describing youth unemployment as the #1 problem for Africa today. Our growing population should be a positive if it's well harnessed, but it's right now looking like a time bomb because of the high level of unemployment among the youth. Young people, the future of Africa, are jumping on rickety boats to get to Europe, just because the growth process has not been conducive to create jobs in Africa. Absolutely right. Glad he said it. Africa's largest economies stall amid slumping commodity prices and political infighting. This is Nigeria, South Africa, and Angola in particular. Government report on Wednesday will probably show Nigeria contracted for a second consecutive quarter in the 3 months through June, as the price and output of oil, its main source of revenue, was squeezed. South Africa may have avoided falling into a recession, according to the median estimate of 5 economists, surveyed by Bloomberg, the continent's most industrialized economy, will not grow this year. Both countries' economies are on a declining path. That's being led by politics in South Africa and government policies that are reactive in Nigeria. Behind the curve policy making is being punished severely. Might not work in the short term. So basically, talking about the currency, Nigerian currency has fallen by more than a third of its value against the dollar since the central bank removed a currency peg. June 20, not enough, I'm afraid. It's a foregone conclusion that Nigeria is in recession. Revenue growth has been positive in South Africa, but if the political situation deteriorates, it will show negatively in the economy. Couldn't call it better. It's going to be tougher for Nigeria to affect the recovery than for South Africa. It's going to have to settle down the extreme movements in the currency and encourage the private sector more broadly. South African minister tells Eskom to release coal contracts, report to the Treasury. The head of Eskom, Brian Molefe, is in the crosshairs and probably the most likely candidate that Zuma's considering if he were to replace Gordhan, and that's why he's getting caught in the crosshairs by Gordhan. South Africa's ruling party says ministers must obey police summons. That refers to Gordhan. South African all shares up 5.43% this year. Dollar versus rand, I think, is going to head towards 14.80. But really, if you really want to know where it's going, we have to ask President Zuma. Egyptian EGX30 up 15.34% this year. I'll put up a photograph of the presidents of Nigeria, Muhammadu Buhari, and Paul Kagame, the president of Rwanda. And Paul Kagame is extremely ascetic and thin, but President Buhari is even thinner, I imagine. Nigerian all share down 4.01% this year. Ghana stock composite index is down 9.07% this year. The IMF says Mozambique must accept a forensic audit to restore confidence. The IMF projects economic growth will slow to 4.5% this year compared with 6.6% in 2015. The Metical has weakened 34% this year against the dollar, second worst performing currency in Africa after the Nigerian naira. The yield on Mozambique's Eurobond due 2023 is at 17.11% versus a record 19.18% not too long ago. I met with and spoke with President Nyusi in Mozambique. I'll put up a photograph of him as well from behind, because that's where I was standing. Let's move on to Kenya. Kenya needs to act swiftly if it's to sell Eurobonds by year end without a jump in borrowing costs. I couldn't agree more. I think this is an optimal moment, and that Henry would be remiss if he missed it. The potential for a US rate increase and looming elections have narrowed the window for a second international dollar bond issue by East Africa's most advanced economy. This is Armando Morales. Kenya must get all the financing they need well ahead of the elections due in a year. The Kenyan Treasury should be prepared to act on the sale as soon as the markets allow. They allow now. Countries already arranged a $600 million loan from China and a $1.5 billion facility from the IMF this year. That's a standby facility. This is an optimal moment. Yields on the 10-year bond are at 7.12%. Doesn't get better than that. Jubilee Holdings reported first half earnings per share eked out a 4.95% gain. Gross earned premium up 12.65%. Profit before tax up 10.237%. Earnings per share up 4.95%. It's strong, it's well managed. They got 9.55 billion shillings cash sitting in their balance sheet as a statement of intent. Sanlam Kenya, by contrast, reported a loss, first half earnings per share loss of 89 cents a share. The group recorded a loss before tax of 145 million shillings versus a profit the previous time of 412 million shillings, mainly attributable to lower income from property sales, mark-to-market fair value losses on equity investments, an increase in expenses related to the implementation of the new group strategy, and negative persistency experienced in the life book. portfolio earnings increased by 98% to 1.2 billion. That must have been interest-bearing bonds. I think they're tidying up. I think they're working through a digestion phase. And I think in terms of market cap, what is that, 5.12 billion? If you can get it a bit cheaper, I think it's probably a buy. Transcentury, my goodness, reported a first half earnings per share surge of 330%. Turnover was down 20.468%, however, but big profit, earnings per share, 4.97 shillings. And it's all about, they're saying, were positively impacted by the recognition of a write-back on the convertible bond following the successful resolution in March 2016, lower interest costs due to reduced non-trading debt, FX gain following the recovery of regional currencies against the dollar. Pretty extraordinary stuff. Outlook remains positive, and I think all I can say is those were interesting results. And I was really of the view that equity shareholders were going to be extinguished, but it seems they found a path out of this. Started off with Coroma paying a massive premium to the existing share price. Let me put up a photograph of the Mombasa-Nairobi Railway just outside the entrance to Savo East. Transcentury, of course, bought and then sold a shareholding in the railway, RVR, and another one of a railway crossing at Minyani Gate, Savo. Nairobi all shares down 8.5% this year and is at lows seen not since November 2014. NSE 20 is down 22.87% this year and at more than a 60-month closing low. But we saw some signs of stability returning to the market yesterday, as we saw really dramatic price drops Thursday, Friday, Monday. Monday we sort of started seeing some buying at the lows. And then yesterday we had a small recovery, although both the indices fell marginally. Once again, thank you for stopping by. I'm always grateful.